Moving on, though, Warren Buffett's holding company, Berkshire Hathaway, outperforms the S&P 500 in 2024, and while it saw its best annual performance since 2021, the company also amassed a record level of cash. The cash stockpile relative to the size of Berkshire Hathaway reaching the highest level since at least 1990. Here with what might be ahead this year for the conglomerate, we welcome in Glenview Trust Company Chief Investment Officer Bill Stone. Bill, I want to just start with the cash pile. A lot of people have been talking about this massive cash pile that's growing at Berkshire and essentially wondering, what is Warren Buffett going to do with it? Do you think the cash pile keeps growing in 2025, or do you think there are some clear moves that they might make here?
Well, I mean, I think the cash pile is really, he was pretty clear at the annual meeting last year, just saying that, he's just not finding enough things he wants to buy. And so I think until he starts to really find larger targets to buy or that he can buy, it's going to probably keep growing because Berkshire should continue to post some pretty nice earnings and produce cash flow. So, I always look at it as they have the optionality that they have the money available. If we get a big market sell-off or, specific company sell-off, he certainly has the cash to step in.
Bill, let me ask you though, when the Oracle, when the greatest value investor of all time is just going to keep sitting on this enormous pile of cash, Bill, is that any kind, in your opinion, of early warning signal about the market for the rest of us?
I mean, I think it should tell you to be a little careful where you tread. Now, I do offset that with the fact that you just know he's not the guy that's going to go into technology and as you talk about all the time, most of what is the hot things these days are technology. And that's not to say that they're not good investments. It's just, he says that's out of his circle of competence. The only thing he's really done in that space is Apple. And he said he looked at it through the lens of being a consumer company, not a technology company. So I think that's where maybe you don't get quite as negative on things based on how much cash he's got. And they're still buying some things here and there. So, it's like everything else. There's usually something to do.
And Bill, I want to stick with Apple because to a similar vein, when Berkshire did sell Apple, there was sort of the read of, well, Warren Buffett's selling Apple. Why would Warren Buffett sell Apple? Should I be worried about Apple stock, right? There was a little bit of a market reaction in that sense. How did you sort of view that move? I mean, Apple had become such a large part of their portfolio that I think one could maybe think it was partially just rebalancing like any other investor would do?
I think that's it. I mean, I think part of it I do think had to do with Charlie Munger's passing. Munger was always one that said essentially don't sell anything in terms of great companies, just keep riding them. And Apple had gotten to be about 50% of the portfolio. It was just a crazy percentage of the portfolio for anyone other than, I guess, Buffett, who could get away with it. So I do think there was some of, hey, let's take some risk off the table. I think you could make some arguments. Apple was certainly not cheap anymore. It was trading up a bit, I think, when he was starting to sell it in terms of on the thoughts that AI would drive the next replacement, cycle, et cetera, which, still may happen. And they still own, 25% of the portfolio roughly in Apple. So believe me, they'll make plenty off of it if it continues to go up.
What about Bill selling down Bank of America? Would that be, again, sort of a simple portfolio rebalancing or something else?
I think that may be a couple things. So one is, while he's now taken it down to less than 10%, so we don't know exactly where he sits on it. I get some feeling, and again, he hasn't said this, but I just read through, he's somehow worried about the economy eventually. I don't think he makes any short-term bets, but he certainly has sold off a lot of the financials. Again, took Bank of America down below. They used to own more than 10% of it. And my guess is next time we find out the actual filings, I think they're going to take it down further. They sold some Capital One. They bought Chubb last year, which, to my view, a very good company, but also a play on taking more risk out of the portfolio because Chubb's investment portfolio is heavily in fixed income. So I think he was trying to offset some of the cyclical risk because, Buffett in and of itself within Berkshire Hathaway has a lot of operating companies with a fair amount of cyclical risk themselves.
Bill Stone, appreciate you joining us today. We'll have to get you back on once we figure out what Buffett's doing with some of that cash.